Today, I'm very pleased to say we're launching our new interactive segment, Your Question of the Month, where we answer your most pressing questions about the world of alternatives and private markets. And our first question comes from James, who asks, where are we in the public to private market pricing resets? There's obviously a lot to unpack there, and so I've asked our iCapital head of private market research, Kunal Shah, to help us answer that question. Kunal, thanks for joining me today.
Thanks for having me.
Well, as I mentioned, there's a lot of different facets to this question, and I think what really is underlying that is a lot of people can look at public market valuations and the S&P 500, the NASDAQ, and it's not as easy to look at the valuation multiples when it comes to private equity.
Yep.
So let's dig into that. Where are we in the private equity valuation resets?
Yeah. So just like the question you asked, its answer is pretty complicated and long, right? So let's start with the fundamental piece, which is private equity valuations are often lagging public market valuation in terms of catching up, right? The transactions don't happen right away. It takes a while, and the valuation and negotiation process is oftentimes longer in private markets. So we always expect 6 months to 12 months of lag between public market valuation and private market valuation. Before I go into the current environment, let me just say one thing, which is long-term averages, which is the best way to evaluate any asset class, shows that private equity valuations, which includes private equity, which is mostly buyout and some growth equity, has always been lower, or has been lower 8 out of the last 10 years compared to public market valuation for that specific year. And for public markets, I'm using S&P 500,
right,
and private markets, you are using a private equity index. Where are we today then? So the question, coming back to the question that you're asking, today, the private equity valuations are still below public market valuation by a factor of about 20%.
Okay.
However, coming into 2023, we were expecting the valuation to correct. They did. In the first half of the year, private equity valuations were just short of 10 times EBITDA multiple.
Okay.
Second half,
from
from closer to 13 times the year prior to that.
Okay.
So it was a pretty significant drop, about 20% correction there as well.
Yeah.
Second half of 23, we started seeing some optimism seep in, largely driven by the public market performance. I mean, NASDAQ was, I think, up 40%. You probably will know better than I do. So there was a significant improvement in public market valuations and sentiments that seeped into private equity valuation. And second half of the 2023 private equity valuations were closer to 12 times, to give you the average for the year of 2023, somewhere in the range of 11 times money multiple.
Right.
Still, I'm sorry, so 11 times EBITDA multiple. Still below where it was in 21, but significantly higher than what we were expecting coming into the year, and especially higher than what it was in the first half of 2023.
Right, so we've definitely seen a drawdown in valuations, but we've seen a stabilization and even a bounce back. And I guess that makes sense considering the public market valuations, which were, to start the year maybe 14, 15 times, but to finish the year, they were approaching 20. So that makes sense. The private market sort of had to catch up with that. I guess let's talk about the investment implications of that. On the one hand, you say, well, since valuations have already bounced back, maybe that's not as good for forward returns. But on the other hand, if valuations are higher, maybe more GPs actually want to exit some of the deals that they haven't been able to exit before. So what's the investment takeaway?
Yeah, so there are a couple of things there, right? So let's start with the piece around sort of valuation adjusting upwards. What does that mean for exit, right? More fund managers are willing to sell. Selling oftentimes is an early indication of fundraising. What happens is investors receive money back and they're now willing to invest that money again with the same manager or some other managers, because they have now capital and fresh cash to redeploy with private equity fund managers. So I think that's potentially a trend to look forward to in 2024. The other piece as valuations reset is deal making activity will pick up. And so all of a sudden you have a much larger sample size to look at from a valuation perspective, that are these companies collectively getting done at the same valuation, or were we looking at the data which was a little bit skewed by the quality of companies? In other words, in 2023, I believe the best companies were transacting because, people were focusing on quality over everything else.
Sure.
And so was the data skewed because you were going after better quality companies on average? And 2024, as more data gets captured because more companies are being transacted, it might tell you a slightly different story around what the valuation really means across the industry. I guess the other piece to factor in is it's still at a discount to public markets, right? And so when you think about the public market valuation as a result of that, I think there is an arbitrage to be captured. You can buy low in private markets and sell high in public markets.
That's right. And either way, it is a helpful development for investors that there's been some valuation correction. But as you point out, I know in a lot of articles that you write, it's not just the multiples, it's not just the low cost of leverage, but it's the value creation that some of our asset management partners are able to generate for investors. That's what drives the long-term value creation in private equity.
100%.
Thank you, Kunal. That was great perspective on a very important question on public to private market valuation resets. And James, thank you so much for your question as well. We'd like to hear more from you, so please send an email to us at yourquestion@icapitalnetwork.com and let us know the questions that are top of mind for you and your clients. I'm Anastasia Moroso, and thank you for joining us today. We'll see you next time on Beyond 60/40.